So thank you for this amazing opportunity to speak here. I would just like to introduce myself in a tiny bit of points which are more relevant to this presentation that I'm about to deliver. Priyanka, could you just switch to the next slide? Thank you. So I've been part of. I've been a serial entrepreneur. I worked extensively in the banking domain from the tech point of view, whether it was iFlex or Oracle. But most importantly, I've been associated with blockchain industry since the very early days. I've had my first Bitcoin since 2012, and it felt literally criminal at that time holding it. So I'm just loving how the markets have evolved from that time to this week here, when yesterday only, I don't know if all of you are following the news, but Standard Chartered Bank and DBS Bank have actually announced at the FinTech Festival, Singapore FinTech Festival yesterday, that they will be starting the trading and custody of digital assets, some select digital assets, including Bitcoin, in their, through their official regulatory companies. And this is what we are getting to. I think one of the first things that I want to highlight here, that eventually the customers are the one who eventually create the product. So I'm a firm believer in customer-centered innovation. I think while we can make a lot of policies and try to boil the ocean, eventually customers are the one who would really determine what is it that they want to use. And speaking of which, I think Kashinath already mentioned that it was, in fact, it was very forward-looking Kashinath, because of whom we actually gone ahead and set up one of the first fraud prevention blockchains for a consortium of trades institutions which are regulated by RBI. I was co-founder and heading the Montago's India setup back then, which Kashinath is leading now. But then, after that success that we got there, we basically were invited by MAS in Singapore to create, when we told them about the concept that we had in mind about creating a platform for trade finance and settlements and payments, they actually encouraged us to be there. So that's where we co-founded XinFin, which sounds strange, but it is actually a short form for Exchange Infinite, basically to let the infinite exchange of values flow, for between the regulated institutions and in a regulated manner. So our focus, we have a live platform there, and this is it's focused on tokenization, settlement, payment obligations, and trade finance as a target market. We also have a subsidiary in Abu Dhabi global market, where there's a license for us for tokenization of trade finance assets, while I'm based in Singapore, and that still happens to be our headquarters and for the network administrator. Great. So, touching back to the same point, which I think is going to repeat for a second here, but, something that Ashwini sir pointed out and Kashinath pointed out as well. And we all know that India has one of the best infrastructures available for payment systems. So IMTS today, UPI today goes out in a fraction of a second. There's literally absolutely no or very little downtime. The wallets that we use are very robust. Paytm is used by almost everyone. We make our cab payments without even thinking that they are being paid or not. So this is a very robust payment system infrastructure that India has, and there has to be a very, very strong use case for Reserve Bank of India and the overall regulators here to consider to take up CBDC as a use case. Moving on to the next slide. As I said, there has to be a really, really strong use case from the customer's point of view for RBI to really make these policies, right? And these are some of the use cases that are actually very Priyanka, would you be able to mute the other?
And put paint on it and
apart from the speaker, everyone to be on mute. Thank you, sir.
Thank you. I think that's a very great work from home atmosphere. Obviously, it's a weekend, so people are having their family time as well. Great. So, for one of the first features that why cryptocurrencies or blockchain technology has become a highlight between actual users is that it lets you hold the cash as if you are holding it in physical form. So you're basically controlling the cash in a custodial form. It's actually resides with you in your wallet as your key. And this is one of the use cases, one of the very strong use cases that I feel which is not so widely discussed, but this is an actual customer-driven need of the market, that people want to have that cash on their hand in the custodial form, and that's one of the first kind of use cases that would drive RBI to support the market with CBDCs, that you are able to the end user, whether it's 100 rupees or 500 rupees that you actually hold in a wallet in physical form today, you should be actually able to hold it in your wallet. And this is not like a Paytm wallet where Paytm is a custodian of your cash, or say ICICI Bank is custodian of your cash, but the users themselves are the custodian of their cash. What is the significance of that? Now, as long as you have that feature, you are able to reach mass market or grassroots at a very, very low cost, because it totally eliminates the high infrastructure costs that are associated with banking as such. And again, I would like to repeat here that this would not disintermediate the banking needs. I think banking will continue to play a very strong role here, but having that custodial cash with users and having it reach to the grassroots at absolutely lowest or no cost is a very strong use case to take up CBDCs as a use case. Because these fees, the high infrastructure fees, are eventually passed on to the users. And while we have Jan-Dhan accounts and all that, when you actually go and speak to people, to actual users, you realize that they are actually reluctant. The reason that they still want to deal with cash is because they are reluctant to pay those high fees that are associating with the high infrastructure. So other than this, there's a great discussion about tokenization, and this is where kind of capital kind of moves freely. You are able to empower startups or MSMEs. You are able to process remittances in a very quick fraction of time at very lowest cost. You are able to empower your MSMEs by providing them export finance, because you are able to convert the payment obligations or digital contracts that they have with exporters in other countries in the form of total tokens. And those tokens are exchangeable or tradable, or they can be converted to cash or against liquidity. This is I think one of the most compelling features that a blockchain platform does bring in the market as well. Other than that, there are many things out there, such as gold, stocks, and commodities, which are obviously traded in the market, but a tokenization of gold is obviously proving out to be a very successful use case, because this is actually letting people hold gold in a digital form, which actually has an underlying gold under it. So these are still some of the very compelling use cases, in spite of India having a very strong payment infrastructure, very near instant settlement and low fee kind of infrastructure. These are some of the very strong use cases that would be very important or compelling for I think central banks and regulators here to consider central bank digital currencies or blockchain as a platform for adding to financial services. Moving to the next slide. So we come from again, going back to the point, we come from a platform point of view. We have a live platform out there, and some of the design considerations that we had, and as I told you, we have a policy of customer-centered design. So we don't want to make up huge planning or policies, but we want to make sure, okay, if these are the parameters that are out there in place, then this would kind of make regulatory institutions as well as individuals to kind of make it comfortable for them to deal with a platform that would have tokenization or central bank digital currencies or stable coins or tokenized cash on it. So some of these points are kind of repeating from the design or the PowerPoint that Kashinath shared with us here. But what are the platform features that you need? So one is that you need a massively scalable platform that can enable this wide range of ecosystem, which currently is supported by your RTGS infrastructure or NEFT or IMP's infrastructure, because the speeds at which blockchains operate, some of the traditional blockchains operate, blockchains 1.0 operate, those are still not sufficient there, and that's why this is a very important design consideration. What would be the transaction like? Whether it would be totally public or it would have its own privacy on it. Whether there is a governance when the blockchain network is running, whether the institutions will be able to govern or participate in it, whether the blockchain will be compatible or interoperable with your legacy systems which operate at instant transaction finality. So when I'm making a BEAM or UPI payment, my transaction goes through in 1 second. So if you have a blockchain platform on the other side, which is still taking 30 minutes or 1 hour to process the transaction, it would absolutely not interoperate, right? So this is a very important feature for this as well. There has to be nearly zero or no transaction fees when if you're really looking to reach the grassroots for people to actually be able to use the platform for day-to-day purposes. There have to be absolutely no fees. So these are some of the design considerations that we think are totally important when you go to an actual platform level to run the platform. Moving on to the next slide. So where do we come from? Again, I would like to repeat that we focus on customer-centered innovation. So we would focus on use cases that the markets can use right now, and that's where we are. So we've been live as a platform since 1.5 years. There's a community of over 20,000 members all over the world who are running and participating in the platform. There's a governance body of who actually run the nodes. There are over 140 of them who are running these nodes. The network has an instant transaction finality, so the transactions go through in a fraction of a second. There is a provision for this platform to be public and private at the same time. So while there's a public network which basically broadcasts everything, we also have interoperability with the Corda network, which is kind of a private network, and you can have a transaction which would have a private information, yet public visibility at the same time. And looking at one of the first markets that we are looking to target, it would have a great deal of connectivity with the finance originators and distributions in the financial world. So we achieved that through ITFA partnership, and one of the ITFA chair members is actually present in the webinar as well. So these are some of the design considerations that we had taken initially, and the platform is kind of live already. It has been running stable for over 1.5 years. Moving on to the next slide, I wanted to demonstrate Priyanka, can you get to the next slide? Yeah, so I wanted to demonstrate here an actual transaction which sits on a live network, right? And all that I spoke about, you can experience here. So, we actually moved something of equivalent of 100 rupees, 10 rupees, and 5 rupees on the network. And you can actually see, Priyanka, if you can click one of the links or all 3 of them, we can actually demonstrate that the feasibility that this network can actually be very, very useful for actually operating at the grassroots level is kind of proven here. So if you see here, this is a 2 rupees equivalent transaction, and the fees is in fraction, so it is 0.00009. This is an actual live transaction that I'm demonstrating. You can actually, if you want to take a look at this. You can get the presentation from me or Priyanka afterwards, and you can actually check it yourself. But this is something that we've been able to achieve. Now, this is considering that you are only connecting to the wallets or the RPC endpoints. You're not actually setting up the nodes or something which have their own cost. But purely at the wallet level, you are able to run a transaction, process it within 2 seconds by a number of validators, but also able to process it at the cost which is literally in fractions, which is really feasible for the network to operate. So this is a 2 rupee word transaction. There are other transactions which is a 5 rupee and I think 50 rupee and 100 rupee. So this is approximately a 10 rupee transaction, and the transaction cost and finality here is again 2 seconds. And the fee you can check in the transaction fee column. It is coming out to be 0.000097 rupees. So these are the things that we have achieved already. These are the limitations of blockchain, the scalability, and the issues of the blockchain that were discussed in the presentation before. That these are some of the issues that we have actually solved. So the technology, the point I'm trying to make is the technology exists. And if you're looking at scalability or benchmarking this blockchain, it has already been benchmarked at 2,000 transactions per second. But there is a slight upgrade that you can do. You can actually speed up the the concept of block propagation, because blockchain obviously has blocks. So if you have higher block propagation hardware for processing those transactions, you can actually achieve 20,000 transactions per second on the same platform as well, and it has already been tested. So the technology exists. It's not somewhere in the future. It exists right now. I think some of the impressions about blockchain does come from blockchain 1.0, which is primarily Bitcoin and Ethereum, which has all its delays in transactions and fees, but that's not really true. The transaction, the infrastructure for hosting a CBDC and stable coins does exist right now. And what I demonstrated to you is it's right there for you to experience and demonstrate as well. Moving on to the next slide. We don't, while the network is live and we don't believe in boiling the ocean, we think that the central banks and regulatory bodies will have their own, they'll take their own sweet time to get into this, and they'll need a very strong and compelling use case to foray into this. One of the things that we are, looking forward to is that all these fintechs, right? These are aggressive fintechs. They also get their regulation from central banks. They are the ones who are most hungry. So this is, and in fact, they are given these approvals by regulators just so that they can actually, set up and prove themselves. And these are some of our core partners. So one of the stable coins called Globiance, it's an e-money license holder from MS Singapore, had just last week deployed their stable coin on the XinFin network. It is live for people to experience. The way it works is it's a stable coin, so it's not a CBDC. Neither does it's a MS regulated e-money license provider, meaning that it is a CBDC. It is regulated by MS. The way it happens is you basically have to deposit, Singapore dollars in bank account to issue a nice Singapore dollar, which is called SGDG. It sits in the system. It is accepted by the multiple counterparties or ecosystem partners who are supporting it. And you can then basically, in a regulatory friendly manner, be able to process remittances across the world or settle transactions across the world at fraction of a cost as well. So what I'm talking about here are some of these live implementations. These are there just to make the audience here know that the efforts are kind of there right now. That the implementation has kind of been going live in phases right now, and I'm sure this will give a very strong buy-in. This will eventually get a very strong buy-in from central bank and regulators. Once they see these things in action, it will make them comfortable, to take up CBDCs, considering that look, all these things have been tried and tested at a fintech level, and maybe we can actually take them to the wide audience. talking about the network, the validators are spread across the world, and you can actually experience it right now. There are 140 Masternodes, 15,000 community members. The volume that the system processes is close to $2 to $5 million a day. This is obviously increasing. The network is live with tokenization of trade finance assets. So basically, the way it works is finance originators, MSME finance originators in the traditional environment are able to get their payment obligations online in a smart contract form, and they are financed by alternative investors. So all these things, all these use cases are actually live on the platform right now for people to experience. And when there's no one from RBI here right now, but this was just a point that we wanted to make, that look, the technology kind of exists and is there used right now by the real world entities as well. Moving on to the next slide. In a process, what we are building building an infrastructure that regulatory institutions will be able to use comfortably. So whether these are retail wallets, and again, the difference between the retail wallets that you need to support CBDC versus the wallets that you have right now as Paytm is that these are non-custodial wallets. That means the users are controlling their cash with their own keys. This is not like Paytm or other bank is controlling their cash, but the users are able to control their cash using PIDO wallets or multi-sig wallets themselves. Custodians, if banks themselves want to be custodians, the technology should be easily integrable within the banking infrastructure. Exchanges, what if I'm able to take a position on a trade finance origination or a letter of credit, which is moving from one port to another, when it is in international waters, how are you able to mitigate your risk? How are you able to give that equivalent redemption in fiat value, to the token holders? Market makers and liquidity, nothing that will be liquid will be used by the market. So you need to have, all the infrastructure in terms of market makers and liquidity, which can work with tokens. So in the process of setting up the platform, this is what we've experienced. This is what we've been building, is making a robust infrastructure that is for entities to study and evaluate while taking the considerations or choice for central bank digital currencies, the design considerations and infrastructure considerations for central bank digital currencies when they go in the live environment. These are some of the references that I just used from the presentations here. Were actually coming from Bank of England paper and OMFIF, some of the design consideration that they had mentioned. If the participants wish to access these papers, they can use it. They are in the presentation. Going on to the next slide. So, I just want to keep it really simple, for people that look, there's no need to boil the ocean. I think the regulators and central banks will take their own sweet time, but the technology and the use cases exist right now, just like Monetago has shown us, and some of the other companies out there are progressing. What we really encourage participants to do here is go ahead, set up your testnet, go ahead and experience how it works, go ahead and experience the risk security yourself. You can do it very well in the test environment so that you don't have to lose anything or you don't have to take any risk. You can do your security due diligence and everything here. So we have a company which basically runs a masternode for XinFin in India, and they can be contacted by software providers or banks or anyone who wants to experience the technology in hand or hands-on for making a very compelling use case for Reserve Bank or regulators to take up central bank digital currencies in the future.
Yeah, Atul, thank you so much.